Let's talk about some more movers in this market and bring in Diane King Hall. She's the host of Morning Movers. How appropriate that the host of Morning Movers is talking to movers today, Diane. Let's talk about the big mover to the downside, which of course is weighing on the Dow once again today.
Yes.
That's UnitedHealth. Shares down another 15%. Fill us in on why.
Yeah, UnitedHealth really can't get out of its own way right now. This is the latest. It started with this UnitedHealth report from the Wall Street Journal on UnitedHealth that it's being under a criminal investigation by the Department of Justice over alleged potential Medicare fraud. They're actively investigating UnitedHealth Group over this. Reportedly, it's specifically the Medicare Advantage billing practices. Details still are limited, but the probe has been reportedly underway since at least last summer and has now turned criminal in nature. Previously, it was seen as a civil. Now, UnitedHealth says it has not been notified by the Justice Department about a criminal probe. They're maintaining that they stand by the integrity of their Medicare Advantage program. They've also blasted the past allegations and say that the Wall Street Journal reporting on billing is misinformation, inaccurate, and biased. But as you know, Caroline, UnitedHealth has just been hit on all sides. Wave of crises has been hitting it. The latest is obviously this criminal probe, but they had this civil Medicare fraud probe previously. They have ongoing antitrust investigations around them. And of course, this week you had the news of the CEO, Andrew Whitty, stepping aside, which was completely unexpected. Chairman of the board stepping into that role. He's been CEO previously, but it's been several years since then. And we've probably forgotten about this, or many people have forgotten about this. They had a hack back in 2023. So to me, this reminds me of all the problems that are plaguing it. It's like a Boeing story, you know, in the sense of that. Yeah. And of course, it would be remiss not to mention that, of course, that top executive that last year was murdered. So there are a lot of both internal and external factors that are affecting the company. Besides today's pressure, you mentioned shares down 15%. They were already down over 40% over the past month. So just heavy pressure. They have a lot of scrutiny, whether it's on the regulatory front, the investor front, and the customer front.
Right. But at this point, this is still just a report in terms of the criminal probe, especially since UnitedHealth said it hasn't been approached about the probe yet. So we'll have to see how this plays out. I think, though, ultimately, it seems like these Medicare Advantage costs are a bigger issue for United. It was the reason that they had to essentially suspend guidance for 2025, which also weighed on shares. Exactly.
That was another piece weighing on shares. I imagine we'll start to see some re-ratings. We're seeing a little bit of that today. We had Barclays, lowering their price target on UnitedHealth to $362 from here, which does still suggest some upside. And I've talked to some people who say that, essentially at this point it's oversold given all the news that we're hearing. But right now it is it's sell and ask questions later when it comes to UnitedHealth.
That seems what investors are doing. Although I don't know, analysts largely bullish. I can't imagine.
I know, I saw that, but I don't think they're going to be playing catch up. The sell side is going to have to make some adjustments, like we're seeing with Barclays. They may still remain bullish, but they're going to have to re-rate the price targets.
Yeah, we'll see. I mean, no one wants to sell when it's down 50% year to date at this point.
This is true.
Okay, in terms of another mover that you're watching, Alibaba shares also under pressure. Of course, we're talking about Walmart as being our key read on the retail front today. On the consumer, Alibaba, also another read in terms of the retail space. What did we learn there?
Mixed picture over there with Alibaba, but investors selling it off the back of the miss when it comes to revenue. That's where the miss was, because they did be on the bottom line. Adjusted EPS, when you convert it to dollars, of course, is $1.73. Street was looking for $1.48. Revenue, again, converted to dollars, came in at just above $32.5 billion. The Street was looking for more than $33 billion. So that was that headline miss on revenue. Now, despite that miss, there was some gains, some year-over-year gains. Revenue actually increased 7%. So it does suggest there was some growth, but again, not enough for what the Street was looking for. Their core is still growing. When you think about e-commerce, revenue for Tmall, Taobao, also that did grow. That rose 9%. You saw customer management revenue. That was up 12%. That's still a key driver for the company. They're expanding something called instant commerce. That's something that we've talked about with JD.com. They've been really focused on this. This is that fast delivery, 1 hour or less delivery model. They're trying to drive more engagement with that model and take market share from each other with that model, especially because we know that the Chinese consumer has also still been, under pressure. U.S. consumer flagging a little bit based on retail sales data, but not like the China consumer. And there have been all these different strategies that an Alibaba, JD.com, parent company of Temu has been trying to put in place to stir demand, like discounting, incentives, the government subsidies. JD uses more of the government subsidies because they're the appliance side. So there's been different things that, where they're trying to position themselves better, Alibaba, say, versus a JD or PDD. But again, the street reaction to this is, okay, you missed on revenue. We're selling this off down more than 6%.
I think probably, too, if you take a look at the share price performance for Alibaba, shares are down 7% today, but still up almost 50% year to date.
Yeah.
A lot of that is linked to optimism that maybe we will see a rebound in the Chinese consumer, given some of the stimulus that China's pumping into the system. So, I mean, the bar was pretty high for this report.
Absolutely. You make a great point about that. So the bar was high coming into this, and you've seen outperformance when it comes to these stocks so far this year, especially, again, considering what we've seen in the U.S. retail space, albeit, you leave, say, Walmart out of that. But the vast majority of analysts are in the buy camp as it relates to Alibaba. So, the view is that we will still continue to see growth here. A potential catalyst for them is they have something called their 618 festival that ends June 18th. That is expected to stoke some more demand.
All right. Yeah, no, I was just taking a look. You're right. Majority bullish, median price target 165, so still some upside to go. We'll see if any analysts weigh in following those results. Yeah. Finally, on your list, Cisco Systems, a winner today.
Yes, I have one winner.
Earnings. Cisco actually had been a winner year to date, too, heading into this. For a while, it was a lone winner in the tech space. It's obviously had some catch-up by some of the bigger names, but Cisco shares up 5%. Walk us through the highlights there.
So adjusted EPS to catch people up, 96 cents a share. The street was looking for 91 cents a share. Revenue, $14.15 billion. The street was looking for $14.06 billion. So clean beat there on both the top and bottom line. In terms of guidance, sales for this quarter ending in July, they're expecting that to come in a range of $14.5 to $14.7 billion. That's better than what the street was looking for. Profit on, they're expecting that to come in, adjusted EPS, they're expecting that to come in at 98 cents a share. Again, better than what the street is looking for. So beat. And then guidance is better than expected. They had momentum within AI. They hit its $1 billion AI infrastructure order target. That came a quarter early, so that's a good sign. And it just shows that they're able to hold up scale there. The CEO credited secure networking, global partnerships, customer trust. Those were the three things that he hit as the reason why. You just saw growth across the board. Product orders, product revenue, services revenue was even up single digits, but still higher.
Yeah, and single digits for Cisco, not bad. Cisco, the second best performer on the S&P 500 today, the best performer on the NASDAQ 100. Unfortunately, not leading the market higher, but a lot of red on the screen in terms of tech and Cisco, one of the greens.
It is one of the standouts. And then in terms of share price performance, you don't usually see this strong of a performance off the back of earnings for Cisco. So up, as you mentioned, 5%. Analysts are upgrading their views on this. Today, at least, Wells Fargo boosting Cisco to overweight from equal weight. They've got a $75 price target on there. Evercore ISI saying margins appear de-risked. So just more upbeat commentary around it. But analysts are pretty split on it with a slight tilt towards bullish.
Okay. Yeah, no, median price target $70 a share. So only $5 away from where it's currently trading. It's only 3% away from the 52-week high. So we'll keep an eye on that one.
Indeed.
Diane, thanks so much for breaking down those morning movers for us.